Yeah, that's a really important point you made. I think a lot of people should consider the fact that if you put money into the Roth IRA from a young age, you can have a lot of money accumulate over time in that account. So the point you made was amazing.
Yeah, Roth IRA is definitely the better vehicle when you're younger, when you don't have to pay that much in tax income. So if you're in, let's say, $30,000 to $100,000 range, a Roth IRA would make sense. There is thresholds to the amount of money you can make to contribute to a Roth IRA, but even if those thresholds weren't in place, if you're a $200,000 to $300,000 earner, a 401k could lower your taxable income by at least 10-20%. There's other ways, and so that makes more sense. And generally, if you're making $300,000-$400,000 a year, you want to lower your tax liability as much as possible in present, because when you retire, you're not gonna be making that much. And so maybe you build up your retirement account where you could pull out $150,000, and that's a huge difference in tax liability than someone who's earning 300 or 400.